Hello, everybody. This is Larry Bashara, president of John Adams Mortgage, bringing to you our next show of the Michigan Mortgage Cast. And today we are going to talk about credit scores and how it impacts you and how to improve it. Did you know that 85% of consumers lack sufficient knowledge about their credit scores and understand the impact that they have? Today we're going to talk about how to prepare in buying a home, how we're going to how you can improve your credit score, and it's not just making your payments on time, although that's a huge part of it. So today we have two great guests. One is Peter Loftus. He is with Credit Plus and 21 years in the credit data service industry. He is FICR certified, and he is a HUD approved non-agency speaker, and certainly considered a credit expert. Peter's done a lot of great things for us. And so, Peter, welcome.
Good to be here.
Thank you. And also with us to bring the mortgage side of it and how credit scores can impact home buying is Brad Silvius. Brad's been a loan officer for us for going on 18 years. He's currently in the Ann Arbor, Southeast Michigan market, but has been in a few other different markets for us, Lenawee County Livingston County and Southgate, Wayne County area. Brad has that special, unique mindset of engineering brain and mortgage brain, and he combines it into one. So Brad, welcome.
Good to be here, Larry.
Thank you. So Peter, let's start with you. One of the things that we get asked all the time is, or how it impacts, or just questions in general is, don't pull my credit. I don't want another inquiry. How can you go into the different inquiries and what that means for potential borrowers?
Yeah, that's a great question, and I get that question all the time. There's a lot of confusion in the industry when it comes to inquiries. The ones that you and I and Brad use here in the mortgage industry is coded very specifically as mortgage at the bureau level. When I say at the bureau level, I'm talking about TransUnion, Equifax, and Experian. At that bureau level, when you and I generate a consumer's or borrower's credit report, it's coded as mortgage. And that's very important when it comes to the scoring models, the specific scoring models that we use in the mortgage industry. That's different than the scoring models they used in the auto finance industry or the revolving account or the credit card industry. So that's where there's a lot of confusion for us consumers. We think it's all the same, but it's really not. The mortgage inquiry doesn't have a negative effect on your credit score because the bureaus, TransUnion, Equifax, and Experian, know that you're going to probably rate shop when it comes to a mortgage, or you're going to have your credit pulled more than once through the origination process. That's why we consumers aren't penalized with a mortgage inquiry. Now, an installment inquiry, that's like your consumer loans, your car loans, your personal loans. And again, if you're out looking for a car, you might do some rate shopping. So the scoring models aren't going to penalize you for a multiple credit pull in a 12-day period for an installment. Now, the real one comes when it's revolving accounts. Those have immediate impact every single time that you go out and save 10% on your Kohl's purchase today. That's a revolving inquiry. If you 90 days, same as cash. That's also going to be a revolving inquiry, and those are going to have immediate impact on scores.
That's incredible information, especially the mortgage inquiries, because there's a lot of consumer advocacy groups such as the CFPB that promote rate shopping, credit shopping, get your best possible mortgage program out there. So Brad, when a borrower says to you, a potential borrower says to you, don't pull my credit, I don't want it pulled. How do you can you help out borrowers right now and how you would bring them along to making sure they get the best program and rate possible for them?
Yeah, we analyze the credit, and a lot of times what happens in the industry right now is that everybody's busy. So a lender might say, hey, you don't qualify, so sorry. But at John Adams, one of the things I'm proud of is that we're actually going to provide a path to success. We're going to take that person. They may qualify for something now, but it might not be the best fit. It might be the best fit now, but whether they qualify for something or maybe even not qualify for anything, we're still going to say, hey, here's how you can improve and get on a path to where you need to be. For example, a lot of times lenders get comfortable with FHA for someone who wants to do a low down payment. When in reality, a lot of times they could qualify for conventional at 3% down versus 3.5%. And conventional is typically a superior product. It's received better in multiple offer situations. The PMI is cancelable after a certain period of time versus the 3.5% down FHA. So not only do we take the time to really provide that specific guidance and analysis for each client, which is kind of rare in the industry now. We're telling them, here's where you qualify for now, but maybe we can get you to a better place. And again, I get a lot of buyers who are put in a program that's not the right fit because that lender hasn't properly analyzed what they could qualify for. And if they don't qualify at this point for any program, we'll put them on a very detailed path to success and help them so they know exactly what to do. Credit can be such an enigma out there. Like, it's this mysterious thing that Credit Karma, this number that pops up, what's it mean? And we'll actually provide them with that very specific analysis so that they'll know the path to success. And it's such a pleasure to 4 months, 5 months, 6 months later, reconvene with that client and then say, you did it. You followed up, you're there. And then, of course, a lot of our business comes from our referring realtors. And then we get to reach out to those referring realtors and say, hey, do you remember Bob? Do you remember Sue? They didn't qualify 6 months ago, but now they're ready. And here's a buyer for you. So it's a service that we offer that I think makes us special at John Adams Mortgage versus a lot of the other lenders that simply just move them right along.
Yeah, and it's important. Putting borrowers in the right program for them is critical. Whether it is FHA, whether it's MSHDA, whether it's conventional loan, it's very important and serves the industry well and serves the borrower well. It's whatever works for their lifestyle is very important.